Hello everyone, I'm the Dividend Portfolio and welcome to my channel. Today we're going to discuss Bristol-Myers Squibb. So just to kind of overview what we're going to look at today, we're going to go through the financial history of the company. We're going to take a look at the core businesses, their very robust drug pipeline. We're going to take a look at the valuation and dividend, and I'm going to provide some final thoughts and also some legal disclaimers. All right, so let's get started. Essentially, one of the first things that really kind of stands out about the financial history of Bristol-Myers Squibb is that they've shown very little top and bottom line growth. Looking from 1998 here all the way to 2014, the company really hasn't achieved any really meaningful revenue growth, and you can see that at the same time there's been no increase in actual net income. So this company actually has a decrease in income from 1998 until about the mid 2010s, and so you can kind of see that they've been challenged to really show strong actual growth during this time period. What should be noted for the company, though, is that they have kept a very good balance, especially in their long-term debt. You can see here that it's very well covered by the revenue and income. And the company also boasts very high gross margins during these time periods. But following 2015 onward, you can see the company has been a major growth spur, and you can just see that the revenue has been significantly increasing. Hasn't translated yet actually to net income, and so part of this was due to their recent Celgene acquisition. So this was complete in 2019, one of the largest mergers in the pharmaceutical companies to date. And you can also see that with that has come significant long-term debt. So they did pay quite a bit for this acquisition. All right, let's move on to the core business of Bristol-Myers Squibb. So essentially, the majority of the company's revenue, about 70% of it, comes from the sales of these three therapeutics: Revlimid, Eliquis, and Opdivo. So essentially, Revlimid is used to treat specific types of cancer. It has a very long-standing use for actually multiple myeloma. And so Celgene, this was a therapy that came with Celgene, and Celgene was actually a leader in multiple myeloma treatment prior to the acquisition. Additionally, Bristol-Myers Squibb has Eliquis, which is used to treat different types of blood clots and strokes. It's very important for patients, especially with arterial fibrillation, and also patients who have taken certain types of implants, like hip and knee. Finally, there's Opdivo, which is used to treat a wide variety of cancers. It's a PD-1 inhibitor, and so it's used to treat myeloma, lung cancer, and other types of different cancers, and it's a biological. So essentially, what we can see in this graph here is the actual revenue brought from these three different types of therapeutics over the last few years. And you can see that Eliquis and Opdivo have seen, really strong growth over the last few years, and they've expanded indications and also been used in combinational products as well, especially for Opdivo. We can see that Revlimid is a recent addition. It came with Celgene in 2019, and it's well on track in 2020 to be the company's best-selling therapeutic. But it's very important to keep in mind that Bristol-Myers Squibb is heavily dependent on the sales of these top three therapeutics. When you compare the sales of other pharmaceuticals, their top three selling therapeutics as a percent of their revenue, what you'll see is that Bristol-Myers Squibb is actually a little bit more dependent than some of the other major pharmaceuticals. For instance, Merck and Pfizer, their best three selling therapeutics only make up 50% in the case of Merck and 40% of the total revenue for Pfizer. You can also tell here that Bristol-Myers Squibb has a similar dependence on the top three therapeutics as AbbVie does. And part of the reason for this is AbbVie has Humira, which is the world's current best-selling therapeutic. So this kind of gives you, a perspective here of the importance of these three drugs and also the reliance the company has on the success of these three therapeutics. One of the really key strengths of Bristol-Myers Squibb is their very robust drug pipeline. As a pharmaceutical, essentially these companies live and die by their ability to get new drugs approved and out to the population. And so in the case of Bristol-Myers Squibb, what we see here is that they have a very robust late-stage drug pipeline. We can see that as phase 2 compared to companies like Merck, Pfizer, and AbbVie, we can see that there are significantly more phase 2 clinical trials out for Bristol-Myers Squibb as of the end of 2019, beginning of 2020. Furthermore, we look at the phase 3. So this is typically the last clinical stage trial before submitting for approval. We can see that there is over 50 clinical trials currently being run for Bristol-Myers Squibb. And this is over double some of the other competitors like Merck, Pfizer, and AbbVie. And it's very similar to the mega pharmaceutical Johnson & Johnson. And so there is a similar amount here. Now, what's very important to mention at this part is that a lot of these phase 2 and phase 3 clinical trials are additional indications for already approved drugs. For instance, when we talked about Opdivo, it has approval for a number of cancer conditions, but Bristol-Myers Squibb is also expanding those indications so that it can be used for more types of cancer. So this is kind of allows it to expand in market share and also is a huge driver of revenue for these companies. Furthermore, a number of the products are also combinational therapies, which are combinations of two already approved therapeutics, oftentimes usually therapeutics within or made by the same pharmaceutical. So these come with additional risks as they become more heavily dependent on the expiration date of the actual therapeutic. To piggyback off that point, it's also important to essentially look at the expiration of these key therapeutics. Now, in the case of Bristol-Myers Squibb, some of their therapeutics are coming up in expiration. This Revalid that they acquired with Celgene is actually expected to expire in the next year and a half, 2 years throughout most of the world. And it's interesting to note that in the United States, they actually have a partial expiration in 2022. So generics can enter the market on a limited basis, and then by 2026, the generics can be available on an unlimited basis. And so essentially when these generics come out and this loss of exclusivity occurs, it really will eat into the profits of these different types of therapeutics. Revalid is a small molecule, and so is Eliquis. So it's expected that when they lose patent protection, there will be a quick and steep loss in revenue. It should also be noted that for Revalid and Eliquis, there are already generics which are approved and just waiting for loss of exclusivity. The other drug here, which is important to look at, is Opdivo. Now, Opdivo has expiration dates much further out, but it faces challenges due to competition. And particularly, Merck has a drug called Keytruda, which works on a similar mechanism. It blocks PD-1, it's a PD-1 inhibitor, but it's currently predicted that Merck's Keytruda will become the best-selling therapeutic in the world. So it has a lot of clinical data to support the effectiveness of Keytruda, and there's been arguments that Keytruda's massive expansion has really hindered Opdivo's growth. Finally, its Eliquis here also has quite a bit of time before its expiration. Eliquis is part of a profit-sharing collaboration actually with Fitbit and Pfizer, and is expected to become, I think, the third or fourth leading best-selling therapeutic in the entire world. So just to kind of provide an overview of the core business here, essentially their therapeutic expansion has been actually quite good. These 3 best-selling therapeutics they have seen strong growth over the last few years, and they're all predicted to be within the top best-selling therapeutics by 2024. Furthermore, their drug pipeline is very strong. They have many new drugs, many new indications, and additionally, I would say the only weakness is that they rely a lot on new indications and combinational products, but that shouldn't deter from the fact that they do have quite a robust drug pipeline. And I would say that the therapeutic competition is one of the important things to keep in mind with Bristol-Myers Squibb, that there are generics approved already for some of their drugs which are nearing patent loss, and there is heavy competition for Opdivo, especially from Keytruda. So let's also take a look at the valuation and the dividend of this company. And so essentially, when we look at the valuation, we look at the current PE ratio, which is on an adjusted basis, we can see that it's currently trading at 9.7. And you look at the adjusted PE ratio over the last decade, this is really, really on the lower end for this company. This company has been trading in, the 18 to 20 plus range for quite some time. And so now it's significantly lower than it normally is. Additionally, when we look at the dividend yield, we see that it's just shy, it's about 2.95%, just shy of 3%. The average for the company is about 3.2, so it's a little bit on the lower end here, but still a very reasonable dividend. And I would argue one of the biggest strengths here with Bristol-Myers Squibb is their free cash flow. And so when they combine with Celgene, they really upped their free cash flow. And so essentially we can see here the dividend payments as a function of free cash flow. And so, they have covered all the dividends over the last decade. But just looking at 2020, and this is 6 months ended, you can really see that the free cash flow is amazing. That they've really significantly increased this, and they easily cover the dividend payment currently. So this kind of goes to show you that this provides a level of safety for their dividend, that they can easily cover it with free cash flow, and also provides an opportunity for them to grow their dividend moving forward. So yeah, just to kind of summarize this, I really like their PE ratio here. Their dividend yields, all right. Be nicer if it was closer to its 10-year average. Additionally, the cash payout ratio is amazing. They have very good free cash flow. They can easily support their dividend, and this will help also ensure that they have dividend growth. Gives them the opportunity, to provide dividend growth going forward. So just to kind of summarize my final thoughts, I think that these three therapeutics, they do have potential for strong growth moving forward, especially with Opdivo and Eliquis. Furthermore, I think the robust drug pipeline will also give the company more opportunities to expand their revenue. The company also currently boasts great free cash flow and is at a very good forward PE ratio. So I think that's its very appealing valuation. They do need to expand from their current major three brands. This is where the drug pipeline will come in, and they're looking at things like T-cell therapies and so forth, which can really help offset the loss of revenue when these patents expire. And finally, kind of to summarize here, I think that this company has a lot of potential to be a rewarding investment. I think that this company has the ability to grow its dividend and to be a potentially good investment. So with that, if you enjoyed this, please subscribe and like. That would mean the world to me. Just to kind of finish out here, I would like to make a disclaimer. I'm not a financial advisor. This is not financial advice. I am sharing my financial journey for fun and entertainment purposes only. The models and graphs are not guaranteed to be accurate, although I do try my best. I do own some of the stocks that I mentioned today, including Johnson & Johnson and AbbVie. And also, if you are going to invest in the stock market, keep in mind it entails risk. Please consult a financial advisor and do your own due diligence prior to investing.